Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on February the 15th, Saturday, with a market read and watch list for the week ahead. Note, Monday is closed in observance of President's Day. Things that I noted last week were bonds, TLT, and IEF in particular, as well as the Barclays Aggregate Fund, AGG, did not seem to sell off, and in some cases were rallying with the spiders as they cruised higher during last week's retracement. REITs have done well. We had a number of trades on those, which we're out of now, looking for a re-entry. XLK, big tech, is looking good. And builders, we noted a couple of weeks ago, actually early January, that the 10-year yield, once it started to fall, that we would see builders in the components and ITB and XHB would see a move higher, and that's exactly what we're starting to see out of nice bullish patterns. Sectors wise, we have XLB and XLK doing well. We have XLI, XLP, and the rest of these trailing or lagging somewhat. And we of course saw the defensive sectors outperforming over the last couple of weeks, as we pointed out in previous videos, as well as healthcare. We have some picks there in the healthcare sector as well as XLU that are continuing to do well. XBI, noting what it did in 2007, we'll go over that chart, mainly because of what something Arthur Hill said over at stockcharts.com related to XLY, the retail sector lagging in 2007 that preceded the move lower in the indices, as well as the finance sector, XLF. We'll take a look at that as well. We're still in taper mode. I did note last week that the carry trade was reversing off of resistance levels, so keep an eye on that. We're still in the taper mode, and here's a watch list, of course, that you can pause and take a look at. We'll go over these as we progress. Do yourself a favor, go over to Ukorowitz's site, The Fat Pitch. He has a really good market summary. Here is the address up above, and I'll put that in the comments section of this video so that you can link right to it. But he goes into a lot of things I won't go into here. I'll just elaborate on some things and also cover things that he didn't mention that I am looking at. The comp continues to fare well, as we mentioned. We're back up at highs that we saw in early January after we sold off, came down to this lower trend line and bounced, of course. We're back above the 10-period EMA, and most of our indicators are confirming that move. Note, NAMO is near the sell zone. We got the NASI crossing over, so that'll give us a green signal. MACD crossed, and bullish or %B is in an area where we could see a reversal, which we would expect since we're up at highs. We could move sideways, or we could move back down to the 10-period EMA, or we could just break out here and just totally forget about valuations at this point, since it seems like no one is concerned anymore and the bullish camp is back in control. The Dow Jones Industrials did fare less well than its bigger cousins, the SPX and the comp. We did not get back up to the highs we saw in January and December, and we are right at the 618 retracement, taking these pivot highs and this pivot low. So that is something to be concerned about going into the week. RSI is back over 50, and we do have a MACD cross continuing, as well as an overbought stochastic. And we saw the peak in ADX, which gave us the all clear on this bounce off of lower Bollinger Bands here, and the move outside of same that we mentioned last week. Shifting gears, this is the NYA, New York Stock Exchange Composite Index. Note we're back over 50, and we did clearly break above this area that we thought might be a head and shoulders top. We negated that, and now we're going back to the previous highs if we get there. After this bounce off this lower trend line, we see the pivots here. We took out the 618 retracement, so the New York Stock Exchange Composite completely negated the thought that it was going to be a head and shoulders top. Note that the high-low indicator is giving us a bullish cross here as well, and the volume tapering off. The Russell 2000 also did not make it back to the highs at 1187. We are right at the 618 retracement, as well as this area that could be a head and shoulders top with a neckline across these lows here. So keep that in mind going into the week. We could see that RSI tends to be flattening out a bit. Slow stow is overbought and could turn. And the strength to the S&P 500 continues to move sideways to down. Note where CCI is. We could get to an area where we turn around and have a sell signal. But for the time being, we are just watching the 618 and an extension of this trend line as a retest. This is an S&P 500 chart with the New York up volume versus down volume down here at the bottom. We'll get to that in a minute. We broke above this Kirby level, and we're right back here at the highs that we saw back in January. We did not get a peak in the advanced decline for a 90% up day, but we did have a nice accumulation here nonetheless. Not to bore you to death, but this is a chart of the S&P 500 with the CPC, which we'd see is right at 0.83. No fear here. We really would like to see a spike like we saw here both in June as well as in October when we saw those lows and a rally higher, but we haven't seen it yet. So the bulls are very confident at this point, and you can see the trend. We had that spike in late January. We talked about TNX and its effect. The yield curve is starting to turn back up. That's bullish for banks that borrow at lower short-term rates and lend at higher rates. It hurts dividend-paying stocks, so we have some ambiguity here with regard to home builders and REITs, so we need to keep an eye on this. We want to see TNX roll over and move back down, and the yield curve resume its move lower. But what I want to point out here was we talked about this box trade short on TNX, and more importantly, the ITB and XHB, the builders, these two charts here. We see this nice rounding curve here on both, as well as the REITs, RWR, that we broke above. Now we're flagging out, and we should see a move higher if TNX continues to move lower and rebounds off of that, or is rejected at that resistance level. And we can see what utilities are doing here as we broke out of this double top that we pointed out, triple top now, and moving higher. So I noted that a lot of people are mentioning particular stocks like HOV and Ryland Homes and a few others. Take your pick. There's a few out there that look really good in the builder sector. So if you're looking for longs this week on Tuesday, take a look in that sector. Let's not forget our DBV, our PowerShares Currency Harvest Fund, which is a way of looking at the carry trade. Note that we got rejected up here. We had a red day on Thursday, and then we bounced. We have to keep an eye on this level right in here where we saw resistance on Wednesday for a continuation. If this moves higher, that's bullish for equities, and if it moves lower, that's bearish for equities. Note that we have slow stow turning over and moving lower, and MACD looks like it wants to turn around and move lower. This is something I would definitely keep an eye on during this week. Since I am trading some bond funds, this is something that I like to keep an eye on, the AGG iShares Barclays Aggregate Bond Fund. This is a benchmark that many use, and in particular mine, VBTIX, a Vanguard fund. You can see a handle forming here, nice little small cup inside of a larger cup and handle. I would like to see this continue to move sideways a little bit and then break higher. Note the Bollinger Bands are starting to compress, and we are staying above the 50% and above this Kirby level here too. So this is some ambiguity for equities if this continues to strengthen and build the right side of this cup and break higher. TLT was pretty much giving me the same indicators as AGG. Note that though the spiders did cruise very aggressively back up to its highs, the TLT and IEF components did, bond funds did not. and they did pull back a little bit, but they're holding right at the 20-period moving average and above this big Kirby bar that we pointed out last week. So if this does bounce and move higher, that would be an early signal, again, as we saw in early January, late December, for the equities move that took many by surprise. And we saw this move higher. If bonds do turn, bounce here, and move higher, that would be some cause for caution on equities. Note the enormous volume that we saw 2 weeks ago. I believe that was a Thursday or a Friday. And the fact that there were a couple of days where the spiders were moving higher and so was TLT. I found that a little ironic. For you Ichimoku aficionados, we did come down. We tested the lower part of span B. We did bounce, move right back through Kumo. We had a Kumo breakout on Wednesday, Thursday, and a resumption. So this is bullish. We got a Kumo cross here, and we have Chico trying to emerge back above the highs that we saw in December and January. Now here are some things I'd like to point out about charts that I am keeping an eye on in the long range. This is XBI, the Biotech Sector Index. Note the strength to the S&P 500 is here. It's climbing. And where this occurred was actually in 2007, right before they moved lower in the S&P. Note that the XBI was moving higher, and as we peaked and moved lower, XBI continued to move higher here. It did dip, but then it got back up to the highs as we had this test of this lower high back in August of 2008. And then we did see a fall off here. But it's interesting to note that XBI was strong in a period where the S&P 500 was rolling over back in 2007. I'm not saying that 2007 is about to repeat. I'm just noting that XBI has been strong. So if you come and you shift over to today's chart, we can see the S&P 500 is back at highs, and the XBI broke out and is flagging now. So I would keep an eye on this chart this week for a possibility that this flag could break higher. I'll go over some components that we're looking at in XBI. These are the ones I'll be talking about as far as trades going into the week. What piqued my curiosity was something that Arthur Hill said over at stockcharts.com, that back in 2007, when XLF moved lower, it preceded the S&P 500 move lower, which peaked back in October of 2007, whereas XLF had moved lower. In addition to that, he also pointed out retail, which showed a very similar pattern where we had this rounding top. This is XOY, the consumer discretionary, turned over, and we proceeded to a new high back in 2007 in October. So this preceded, both of these preceded that move, and something to keep in mind for the weeks ahead, as it took a few months for that to happen, but it's something to keep an eye on. Note that we're back at highs, and the XLY is moving lower. We could see it retest this. Just keep an eye on this for the week. And with XLF, same thing applies here. This is a chart of XLF. You can see that we're making a lower high presently, unless we take this out this week. Just keep an eye on this again, where the S&P 500 is back to recent highs. So keep an eye on that. What happened in 2007, I'm not saying this is going to happen again. It's just something that I'm keeping an eye on with the XLF lower back in 2007 when it made a newer high. I am expecting a pullback at some point to give us a better entry for a move higher into year end. And finally, with the chart of the retail sector, which he pointed out the same thing. Back in 2007, we saw this move lower, with the S&P 500 continuing to move higher. So we had divergence there back in 2007. It's not saying that this is going to happen again. It's just something to keep an eye on if history does in fact repeat itself and we see a move higher on the S&P 500 with this moving lower. That would not be good for stocks, as the retail sector makes up some 2/3 of the US GDP. Let's take a look at some scans. This is a scan for Bollinger Bands and a squeeze. This is something I look at for setups. Note what's performing well, and we'll look at some charts. Let's take a look at 3M is starting to pull in. After a nice move, I would expect this to move a little bit lower as Bollinger Bands start to pull in a little bit. Note that MACD is about to cross as well. Aetna, I noted that a number of healthcare names, United Healthcare, Humana, both had tighter Bollinger Bands and were making a nice move. There's United Healthcare. Note, off of the 200 period moving average, we had this nice move up to the upper Bollinger Band. RSI is starting to move higher. And we have a MACD cross coming. Nice volume here. So United Healthcare was definitely one I'd be keeping an eye on. Here's WellPoint. You can see Bollinger Band squeeze. This looks really pretty right at the 200 period moving average. 50 period is a shaded area. So we could see this move higher with the break above this recent high at 89.04. But this is definitely in a bullish territory. We see the Kirby level here that we could break above. If we did, that'll be clear sailing back up to these recent highs. I would expect to see this Bollinger Band continue to expand here. MACD is giving us a cross, and we have some decent volume. And note, full stochastics is moving higher, and we have an ATR right above 2. Note, Humana is also in this Bollinger Band squeeze setup, and we can see that we're really making a nice move here above the 50 period moving average. I would think, as this is above the Kirby, that this should continue to move higher and test this level here at 109.98, 110 in the near future. MACD has already crossed. We had a decent amount of volume on Friday. HOV also on the Bollinger Band squeeze list. We can see we're trying to get back above 50 RSI, and we can see this nice wedge pattern that we're developing moving through the 20 period here with this Kirby ceiling just here above at 610. So we would expect some resistance there on a breakout, but we do see MACD is starting to slowly turn and move north. So this is a possibility. Let's take a look at some of the other builders. Lennar, something of a flag above the 10 period EMA, and the Kirby looks decent as well. 50 period is below us as well as the 200 period. Do note a slight downslope on the 200, but all the other moving averages are moving. KB Homes, we have some levels here that we're moving above. We have this Kirby, and prices are moving right along the 20 period moving average with Bollinger Bands just grinding higher. Toll Brothers is another name that showed up on the Bollinger Band squeeze. We can see that we're just starting to break above these recent highs, and we have this Kirby level up here. So prices should move higher. RSI is pointing the way north. MACD is already crossed. So this one's already starting to lead the pack. I would keep an eye on VZER because we are in a downtrend. So until it breaks that trend, breaks the highs connecting here, this one's a little suspect. MACD is starting to turn though, and stochastics is trying to wind up. But Toll Brothers looks the best in the group so far. Shifting and focused over to XBI, looking at ALNY. Pharmaceuticals, descending pattern here, looking for a break higher. Area, this lack of a Kirby here for the most part, prices could get sucked up into this area and fill this gap over the next several months. So this is something that you can look at long term with Bollinger Bands continuing to grind higher. ISIS Pharmaceuticals, you can see a Bollinger Band squeeze. We tried to move higher and we got rejected. We have pretty much a gravestone doji there at this Kirby level with nice volume, and a MACD looks like it's trying to cross. So keep an eye on ISIS. Shifting gears, AEP, utilities doing well. Most all of these charts look the same way. AEE was in our list last week as well. Continues to move higher. Dominion, Bollinger Bands keep expanding. PNY, another nice chart, continues to move higher. is right at the 200 period moving average. PCG. I won't go through this whole list, but this is my scans and what had popped up on the list. So keep an eye on these, pull these charts up, make sure to check earnings and short percent for the possibility of a nice rally. If you have high short percent and a nice pattern with the Bollinger Band squeeze, that usually gives you a good setup going into the week. Note, I did not update Mikey's list, but this is what he was looking at last Sunday. Okay, so this is Cousin Vinny coming to you from closingprint.com with a look at the week ahead and a watch list. Hopefully this helps. We'll talk to you in the room. Take care.